As we look at the boards today on Tuesday, January 13th, 2026, L3Harris Technologies is trading at $351.67 USD, marking a significant intraday jump of 10.99 points or 3.23%. While the broader market is chewing on fresh inflation data and the start of bank earnings, L3Harris is carving out its own path. Most people see a defense contractor like this and expect a slow, grinding climb that mimics a utility company. They think it is just another cog in the military-industrial complex that moves only when a budget gets signed. But the reality we are seeing today is far more aggressive. The company just confirmed a massive $1 billion investment from the Department of Defense specifically for its rocket motor business. This is not just a standard contract, it is a strategic seeding of a new entity because L3Harris is spinning off its missile solutions business into a separate publicly traded company later this year. This moves the company from being a diversified defense giant into a more focused high-growth technology powerhouse. If you have been tracking NVIDIA stock or Apple stock for growth, you might have overlooked the massive value being stripped out and highlighted here in the defense sector. The market narrative for years was that L3Harris was struggling to integrate its big acquisitions, specifically Aerojet Rocketdyne. Investors worried about the debt and the complexity of managing so many moving parts. Today's price action tells us that those fears are being replaced by a realization that the company is effectively becoming a kingmaker in the space and missile defense game. While many retail investors are busy with Robinhood stock trading or looking for the next meme on the Robinhood app, institutional players are quietly moving into names like LHX because of this structural shift. The Pentagon is essentially subsidizing the creation of a new competitor in the solid rocket motor market to break the duopoly that has existed for decades. This is the kind of insight that the average investor using basic investing sites might miss. When the government hands a company $1 billion in convertible securities to help them stand up a new business, they are not just buying products, they are shaping the entire industrial base. If you are managing your own money through an individual brokerage or perhaps using Schwab Intelligent Portfolios for a more hands-off approach, you have to look at the tension between what the public thinks is happening and what the balance sheet shows. The public thinks defense is a mature, low-ceiling industry. The reality is that we are in a period of rapid technological replacement. L3Harris is reorganizing from 4 segments down to 3: space and mission systems, communications and spectrum dominance, and missile solutions. This is a lean, mean structure designed for speed. They are calling themselves a trusted disruptor, and while that sounds like marketing, the numbers back it up. They are seeing organic growth that rivals some of the big tech names. In fact, while Tesla stock has been navigating its own volatility, L3Harris has been consistently hitting new 52-week highs. Today's peak of over 361 USD earlier in the session shows there is a lot of appetite for this spin-off story. Comment below how many shares of L3Harris Technologies you currently hold, or if you are planning to wait for the spin-off to buy into the missile business specifically. It's a rare move for a company of this size to get this level of direct support from the Department of Defense for a corporate restructuring. Usually, the government stays out of the boardroom, but the demand for rocket motors is so high right now that they are effectively acting as a venture capitalist. For those using Interactive Brokers or the Fidelity mobile app to place trades, the volume today is telling. We are seeing a significant uptick in institutional buying. Large funds that typically hold Fidelity ETFs or Fidelity mutual funds are looking for alpha in the industrial sector because they see a valuation gap. Even with the stock up over 60% in the last year, some analysts are pushing price targets toward the $400 mark. The recent movement is driven by more than just the spin-off news. We have to look at the macroeconomic backdrop. Inflation came in at 2.7% today, which was exactly what the market expected, but the core reading was actually lower at 2.6%. This gives the Federal Reserve more room to breathe, which is generally good for capital-intensive businesses like aerospace. If you are doing your own online investing or seeking investment help, you know that interest rates have been the primary headwind for the past 2 years. As those pressures ease, companies like L3Harris can refinance their debt more effectively. This is particularly important because LHX took on a lot of leverage to buy Aerojet Rocketdyne. Now, with the spin-off and the $1 billion injection, that debt profile is looking much healthier. Those using SoFi Invest or SoFi Active Investing might appreciate the growth profile here that looks a lot more like a tech stock than a traditional industrial player. L3Harris's business model is built on 3 pillars now. First, there is the Space and Mission Systems Group. This is where they build the satellites that track hypersonic missiles. The government is terrified of hypersonics right now because traditional radar can't see them well. L3Harris is winning tranches of contracts for the Space Development Agency's tracking layer. They are beating out much larger competitors because they can build these things faster and cheaper. Second, you have the Communications and Spectrum Dominance segment. This is the bread and butter, tactical radios and electronic warfare. Every soldier on the ground needs a radio, and L3Harris owns that market. Third is the Missile Solutions Group, which is the part getting the billion-dollar boost. They make the motors that power everything from the Javelin to the massive ICBMs. This segment alone is being valued by some analysts at over $11 billion. When you compare that to the total market cap of the company, you start to see why the stock is jumping. The sum of the parts is clearly worth more than the whole was trading for yesterday. For someone getting started with online investment or using a Fidelity trading platform, it's easy to get distracted by the flashier sectors, but the momentum here is hard to ignore. We have seen sector-wide tailwinds as the budget looks to hit new records. There's talk of the budget reaching $1.5 trillion by 2027. If that happens, L3Harris is positioned perfectly to capture a huge slice of that pie. They are not just a supplier, they are a prime contractor now. This is a major shift from 5 years ago. They used to just provide the components to companies like Lockheed or Boeing. Now they are winning the whole contract. This means higher margins and more control over their own destiny. If you are using Interactive Brokers or looking at your Fidelity Wealth Management account, you might want to ask why your portfolio isn't more exposed to this shift in the defense landscape. Expectations were that L3Harris would spend 2026 just trying to keep its head above water and pay down debt. The reality is that they are aggressive. They are selling off non-core assets, like their Space Propulsion and Power Systems stake, to AE Industrial Partners to focus on the high-margin stuff. This is a company that is being run like a private equity portfolio. They are cutting the fat and doubling down on the winners. This is why you see the stock trading near all-time highs while others are struggling. Even if you are a fan of self-investing through a Robinhood brokerage or SoFi trading platform, you have to appreciate the clinical way this management team is operating. They are not waiting for the market to give them a higher multiple, they are forcing the market's hand by restructuring the business. When we look at older reports, the company was often criticized for having a conglomerate discount. This meant that because they did so many different things, investors couldn't value them properly, so they just gave them a lower price-to-earnings ratio. By spinning off the missile business, they are killing that discount. They are giving the market a pure-play missile company and a pure-play space and comms company. This is a classic value unlocking move. It's the kind of thing you would read about in a deep dive analysis on Interactive Brokers or a Fidelity Brokerage Research report. The goal is to make the stock easier for analysts to model and for investors to buy. The future outlook here is tied to the arsenal of freedom concept. The world is getting more dangerous, and the United States needs to replenish its stockpiles. This isn't a one-year trend, it's a decade-long cycle. L3Harris is at the center of that replenishment. Whether it's drone defense systems like Vampire or the motors for the next generation of interceptors, they are involved in every major program. While some people are worried about the risks of a government shutdown or budget cuts, the reality is that missile defense and space are the two areas that always get funded. They are the highest priorities for national security. This provides a safety floor for the stock that you don't always get with something like Nvidia stock or other high flyers. If you are looking for investment help or exploring investing sites to find where to put your capital, consider the stability of a company that has a $36 billion backlog. That is essentially guaranteed revenue for the next several years. Most companies would kill for that kind of visibility. When you combine that with a dividend that has increased for 24 consecutive years, you get a very compelling total return story. For those with Fidelity IRAs or people using Robinhood investments for long-term wealth building, this kind of consistency is the foundation of a solid portfolio. You don't need to find the next 100x winner if you can find a company like